Ever wonder how the big players in the market, like hedge funds, banks, and even commercial traders, position themselves? Well, what if you could take a sneak peek into their own strategies to refine your very own trading edge? Stick around, because today we're diving into the Commitment of Traders report, your roadmap to understanding market sentiment. Hey everyone, welcome back to my channel. If you're into trading, whether it's forex, commodities or indices, you've probably heard about the Commitment of Traders report, or the COT report for short. But what exactly is it, and how can it supercharge your trading strategy? In this video, we'll cover what the COT report is and how it works, when it's released and how to access it, practical ways to use it in your very own trading, and the benefits and limitations that you need to know when using COT report data. By the end of this video, you'll know how to leverage the COT report like a pro, so let's get started. The Commitment of Traders report is a weekly publication by the CFTC, which stands for the US Commodity Futures Trading Commission. It's essentially a breakdown of the open interest in various futures markets. Open interest refers to the total number of outstanding contracts in a particular futures market, essentially how much activity is happening. Now, the report divides market participants into three main categories, as we can see from this small COT report indicator which I have on my trading view. So first of all, we have commercial traders. These are typically businesses or institutions using the futures market to hedge their risk. Think of a farmer locking in grain prices ahead of harvest, or an airline hedging fuel costs. Their primary goal is risk management, not profit from speculation. One key example which I like to use for commercial traders to make people really understand how this works is think of, for example, the company Apple, who sell technology products all around the world. Well, Apple sell their iPhones, Macs in various different countries like the US, in Europe and in Asia, places like Japan, China and the such. Now, because Apple are trading in multiple different currencies, they do need to hedge their risk, because of course, if they're, for example, selling iPhones in dollars, in yen, in Canadian dollars, in Swiss franc, then at the end of their reporting year, the fluctuations in currency pairs may affect their overall trading profits. So they need to hedge their risk by operating in different futures markets or foreign exchange markets. The next key market participant in the COT report is institutional traders or non-commercial traders. This group includes speculators like hedge funds and institutional investors. Their aim is to profit from price movements rather than using the market for hedging. Their positions often indicate market sentiment, and this is the key market participant group which we'll be looking at when we're analysing COT reports. And third and finally, we have non-reportable traders. These are often smaller market participants or traders, often the retail traders or retail participants within any individual market. While their impact on the market is much smaller than commercials or non-commercial traders, their collective positioning can sometimes reveal trends among less experienced players. Think of the Commitment of Traders report as a behind-the-scenes look as to who's trading what and why. It's a bit like seeing the playbook of different market players. So one thing you may be thinking on the back of this is, when is the COT report released and how can you access it? Well, first of all, as I explained before, you can see on my trading view that I do have a COT report indicator open. Now, if you want to add this indicator to your chart yourself, if you head to the indicator section and search COT report, you can use the COT report indicator by Trading Nerd, which is the one which I use particularly. There are also various other indicators on TradingView which you can use. However, I prefer to use this one, and the reason being is it summarizes it very nicely in a table for you right here. However, if you want to actually take this information from the source, then you would go onto the CFTC official website. We'll discuss how to find the COT report on the CFTC website very shortly. So guys, within trading, timing is everything, and the COT report is no exception. The report is released every Friday at 8:30 PM GMT or 3:30 PM Eastern Time, but it reflects data collected at the close of business on the previous Tuesday. This 3-day delay is important to consider when analysing the data. Of course, it's not real time, but it still offers valuable insights into market sentiment. So guys, where can you access the COT report? Well, first of all, you can look at trading platforms like TradingView and use the same indicator which I showed you previously. So to find the COT report on the CFTC official website, I suggest Google searching CFTC COT report, and then you can click on the link which will take you directly to the Commodity Futures Trading Commission website. Now, when you go onto this section, the report which I personally use, if you scroll down, is the Chicago Mercantile Exchange. And you can get this in either long or short format for futures only or futures and options combined. So let's just go short format for futures, and you'll see this is broken down in a big old report, and this is released, like we say, every Friday. Now, for many new traders, this can be a little bit more complicated. The raw data is available here for free, and it covers all major futures markets, including commodities, forex and indices. However, like I say, the format can be a little bit technical, as you can see on the screen now, and a little bit overwhelming for beginner traders. So I would suggest either using, like I say, the COT report indicator on TradingView, or another option which you can look at is on the Barchart.com website, which I would say is probably the first port of call for beginner traders. So if you load up Barchart.com, as you can see, we'll look at this for gold, for example. However, you can see we've got lots of different major markets here. Let's go on gold to start with. And if you scroll down, and actually a side note, there is a lot more important information which you can get from Barchart.com. However, I'm just going to be showing you the commitment of trader positions on today's video. But as you can see, this is broken down in a very detailed but a little bit more simplistic format on this website. So you have commercial traders, their net positioning split between long and short. So what this tells us is, as of the 31st of December, the commercial traders had 60,000 open long positions on gold and 331 short positions on gold. But the real point which we want to look at is non-commercials, which are obviously your institutional level investors like hedge funds, etc. Now, as you can see, the bias is very much long on gold from non-commercial traders. So we'll discuss how that can benefit us in the next section. And finally, if you want another place where you can access COT report data, there are many financial news outlets, websites like Bloomberg, Reuters, Investing.com, that often provide summaries of COT report data, including visualizations that make it easier to understand. So if you are a subscriber to any of those free financial news outlets, then feel free to have a dive on their summaries. So my advice here, guys, if you're new to looking at COT report data, I would recommend starting with one of these simplified sources, such as Barchart, one of the news outlets, or even the summary on the TradingView indicator before diving into the raw data, because that can be slightly confusing. Now let's move on to how to use the COT report in your trading and how it can benefit you. Now, let's get into the practical side of things. How do you use the COT report to improve your trading decisions? Well, here are some key strategies. First of all, you can identify market sentiment. By analysing the positions of non-commercial traders, the speculators, you can gauge overall market sentiment. For example, if hedge funds are heavily long on gold, as we can see here from the Barchart website, with 282,000 open long positions and 35,000 short positions, then it may indicate a bullish sentiment. Conversely, significant short positions could signal bearish sentiment. The second way which we can look at this is we can spot overcrowded trades. So extreme positioning, which you may consider this as. Now, if we go to the gold chart on TradingView and load up XAUUSD, which is of course gold, you can see this institutional summary shows that 87% of commercial or non-commercial, traders are long gold, which is essentially the exact same as these figures. As you'll see, 282 minus 35,000 just gives us the net positioning or net contracts here of 247,000, and we can see that there is an extreme positioning here for institutional traders. Now, this is where the majority of traders are on one side of the market, which can indicate that a reversal in trend is near. Markets often move in the opposite direction of extreme sentiment, a phenomenon known as crowded trades. Now, one way which you can analyse this is rather than just purely looking at the sentiment on a week-by-week basis, you can put this into a spreadsheet or use a chart like you have on Barchart.com to analyse the change in net positioning of institutional traders over time. For example, institutional traders tend to be trend-following traders, so if we can see that over time they are scaling into long positions and scaling out of short positions, that can help us identify the sentiment and trend of the market being bullish, and we can ride that trend along with hedge funds and big players within the market. Now, obviously, this is a good side to be on because these guys, their job is to make profit from futures markets, from FX markets. That is what they do on a day-to-day basis when they manage their client funds. So this is a great way to strategize and really analyze the sentiment of the market and use that within your trading. Third, which does lead on from that point, is we can use COT data to confirm trends. For instance, if you notice an uptrend in gold prices and COT report shows increased long positions over time from commercial traders, it strengthens the case for continuation of trend. The fourth is we can detect divergences. If prices are rising but non-commercial traders are reducing their long positions, it could signal a potential reversal or a weakening trend. And fifth and finally is we can pair this very, very nicely with technical or chart analysis. The COT report is most effective when used alongside technical tools like support and resistance levels, moving averages, and even oscillators like your stochastic, RSI, or anything similar. This multi-level approach to trading can give you more confidence in your trades and strengthen your strategy. One thing, guys, which I would like to mention here is remember that the COT report is not a crystal ball. If you've never come across it before, it may seem like the holy grail, but it's just a tool to enhance your strategy and not replace it. So why should you care about the COT report? Well, here are some of the biggest advantages which I could think about when planning this video and when really thinking about how the COT report benefits traders. First of all is transparency. It's one of the few publicly available resources that provide insights into financial, institutional, and commercial trader activity. This level of transparency is extremely rare in the trading world, so we should take advantage of it when it's given to us. Secondly is sentiment analysis. By showing how different types of traders are positioned, the report helps you understand the underlying sentiment in a market, something price action alone can't always reveal. Third, long-term insights. While it's not ideal for day trading, COT report shines when used for swing or position trading. It's great for identifying broader market trends and shifts. And finally, unlike many trading tools and indicators, the COT report is completely free to access. So whether you're a beginner or a seasoned trader, these benefits make the COT report a valuable addition to your trading toolkit. So guys, you may be thinking, wow, this COT report is really the holy grail in trading, and you're kind of on the right lines. The COT report is an invaluable tool for my personal trading. However, no tool is perfect, so let's go over some of the limitations of the Commitment of Traders report that you need to keep in mind when using it. The first and most logical limitation of the COT report is lag time. The data is 3 days old when it's released, which means it doesn't reflect the most up-to-date market conditions. This can be a drawback, especially within fast-moving markets. Also, the raw data can be challenging to interpret, especially for beginners. The complexity takes time to learn, and how to extract actionable insights is something which will come with time for more experienced traders. Also, as with any indicator or tool you use within trading, it's not a standalone tool by itself. While it provides valuable information, relying solely on the COT report can lead to poor trading decisions. It's best used alongside other forms of analysis such as technical and macroeconomic or fundamental analysis. One other thing to bear in mind in terms of a limitation is that the COT report only focuses on the futures markets. So because it only covers futures contracts, it means it doesn't provide insight into equities or other asset classes. Understanding these limitations will help you to use the COT report more effectively and avoid common pitfalls. And there you have it, the Commitment of Traders report demystified. While it's not a crystal ball, the COT report is a powerful resource for understanding market sentiment and identifying trading opportunities. If you found this video helpful, don't forget to like, subscribe and hit the notification bell for more valuable trading insights. And let me know in the comments, have you used the COT report before in your trading, and what's your biggest takeaway from this video? Thanks for watching, and I'll see you all in the next video. Happy trading and peace.